So thank you everybody for joining yet another property buyer and hotspotting webinar. Really thank you for allocating the time today to join us. We're going to be talking about where to buy for under 600K, well, around 600K. Terry, prices are moving so rapidly that we keep having to adjust the title of our webinars every year, if not every 6 months, depending on property prices. But we've got a jam-packed program today. We've got a number of great suburbs to share with you and locations to share with you. But Terry, just want to give you a brief introduction. Terry Ryder is the Managing Director of Hotspotting.com, puts in some fantastic research hours. But Terry, tell us a little bit about yourself and what we can expect in today's webinar.
Yeah, well, our business is basically dedicated to two things. One, helping people understand real estate better, because I think that's one of the issues for people wanting to get the best out of real estate, whether it's as home buyers or as investors. Having a decent understanding of how real estate works and why some areas perform better than others on capital growth, because that's the second thing we do. We help people identify the best places to buy, because we don't have one market in Australia. We have literally thousands of markets, and they're all doing different things at any point in time, all fundamentally driven by what's happening in their local economy. So that's the simple answer. We try to give people a great understanding of that so they can get the best out of their buck when they invest in real estate.
Fantastic. Well, Terry, it's always a pleasure. I love working with you with these webinars. We've got some great information. Just for everybody's information, we are recording today's session. So if you do miss any of it or want to hear it again, we'll be sending out the recording link. Plus, there'll be a time for Q&A at the very end of the session. So please do stay for the end. And we've got a couple of special offers as well to give you at the very end. So as we go through the presentation, please just jot your questions in the Q&A box down the bottom of your screen. So put your questions in there and we'll try to get through all of them and finish up at the very end there. So Terry, I'm going to share my screen, make sure I've got the right screens up. Here we go. 1, 2, 3, sharing that. So just double check. Give me a thumbs up, Terry. You can see the screen. Okay.
And it's transmitting beautifully.
Excellent. Wonderful. So there's our title. I'll just give everybody a brief disclaimer. Obviously, we don't know your individual financial circumstances, so any information we present today is general in nature, and you do need to consult licensed professionals before taking any action. All right. So Terry, I'm going to hand over to you, but just give us a couple of parameters. What are the sort of 7 or 8 key things, factors that investors should look out for when we're trying to pinpoint these type of locations?
I think the first one is understanding that it's the most important thing is the local economy. Real estate's really local in nature.
Yes.
And we try to highlight for people in the areas that we recommend why these places are compelling, and it's mostly about the local economy. What's happening in terms of, is the population growing? Are jobs being created? Is there a vibrant economy there in terms of diversity? We don't like to recommend one-horse economies, like a place that's solely dependent on mining, or a location that's solely dependent on tourism or agriculture. We want diverse economies. Affordability is important because most buyers have a limit to just how much they can afford to spend. We do have a certain focus on the rental market. If vacancies are under 1% and rents are rising, there's a pretty good chance that prices are going to follow that trend as well. It's very rare to have a location with a 0.5% vacancy rate and rents rising 10 or 20% a year and prices not also performing very well. Locations with good amenities and infrastructure are important, of course, but in particular, we're looking for areas that have spending on new infrastructure. That's a huge generator of demand for real estate. It really pumps up the local economy, creates jobs, and some types of infrastructure create thousands of jobs and they're being built, but even more jobs when they're finished and operating, like hospitals and universities. There's a couple of good examples. So those are some of the key factors that we look for in a location that we're happy to recommend. And we always take the long-term view. We're not looking for short-term sugar hit type locations. We're looking for places that are going to perform over time.
Fantastic. And what about areas like that have performed really well? Do you sort of have an agnostic view? Like some areas have been going really well for 10 years, but if they've been going well, do you just cut them off your list, or do you go, you know what, there's probably another 10 years in them? What do you say to that?
when we think an area is getting towards the high end of the cycle, that's when we start to take it out of our reports because
Mm.
essentially we're trying to identify the places that are the future hotspots, not the current hotspots. Not
Mm.
much point in telling people about a market that's currently hot
Yeah,
because all we're doing is telling them where they should have bought maybe 2 or 3 years ago.
yeah.
So once we start to observe that a market's really competitive and getting towards the peak of the cycle, that's when we start switching our focus to new areas.
Mm.
Um,
Yeah, great
and
point.
a lot of investors find that quite difficult. It's very, very compelling, I suppose, when you read that a market is booming to want to dive in there. But what's harder for investors is to invest in a market that's currently flat in the belief or the conviction that it will be a performer in the future. It's a lot of comfort in buying in a place where the market's already rising strongly, but it's
Mm.
not necessarily the best thing to do.
No, really good point. You do have to have the confidence, and it is hard to go against the herd. Unfortunately, people want that social proof that it's a good area, but as you pointed out, and I've just clicked the slide to the next four things to talk about:
Yeah.
population growth, diversity of employment, shortage of dwellings, and lifestyle factors as well. So all of these factors are key things that you take into account before you recommend an area, right? Mm.
Population growth can be a little bit misleading because there are plenty of
Mm.
areas, particularly in our major cities, that there's really not much capacity for population growth because these areas are fully developed and built out, yet they can still have exceptional exceptional capital growth. It's all about the weight of buyer demand, and
Mm.
sometimes that demand is very strong areas that aren't growing their population because there isn't
Mm.
any capacity to. On the other hand, an area that's having high population growth, that may only be the case because it's on the fringes of one of our major cities and there's land available for new development, and that's not necessarily a a good place to invest because there's lots of land available and lots of ability for the market to keep replicating what you're buying with new houses. So
That's
you've got to
right.
be a little bit careful with the population growth
I
one.
think the other point, just if I jump in there too, the other point of that is like, let's say you take Sydney, for example, and you look at the southwest areas like around Campbelltown and Luddenham, where there's still lots of land to be developed. And that can have, potentially it's forecast to have like 190% population growth, but there's still lots of land that's going to satiate supply. So you've got to get the right combination of population growth and limited supply to get the magic formula for capital growth.
That's right. And it's a combination of point number 5 and point number 7, really. And I think that population growth comment applies particularly to regions where if a regional city is growing strongly and its population growing, it is a good indicator, more so than for an area in a capital city. But combine that with number 7, we do have, as everybody would be aware, a serious undersupply of dwellings in most parts of Australia. So if you've got rising demand and a shortage of supply, which applies to many of the good places that we'd recommend in Australia, then that's a formula for prices and rents to keep rising.
Good point. All right. Well, Terry, I won't add any more to the criteria except to say that, what you've done in those reports is fantastic. And we also on our website have a couple of free downloads for the top 20 criteria of things that we look for in investment grade properties and locations. But let's jump into it, Terry. We've got quite a number of areas to get through, and I'm sure everybody's logged on to find out some secret sauce. But let's go to the first one here, which is Townsville. And that's an area that we particularly like and are still buying in. We recommended it last year. We're still recommending it this year for our clients. But Terry, there's traditionally five pillars to the economy of Townsville, right? You've got defence, agriculture, mining, tourism, and education.
Yeah.
And each of those has a significant impact, but the prices have risen, and I'll be giving examples of some properties we bought for our clients later on in the presentation, sorry. But tell us your thoughts, Terry. Why do you think Townsville's a good hotspot to buy in?
Well, it's really that diversity of economy that's so great. There's probably nowhere else in Australia that really has the strong diverse economy that Townsville has. There are a few other contenders, of course, and it's an arguable point, but for us, Townsville is the epitome of the sort of place we like to recommend because it's got so many pillars to its economy that are really strong and important ones like defence. You mentioned both an army base and a RAF base. It's probably not appreciated by many people how much that pumps up a economy for a regional city to have the coming and going the traffic that's generated by and the demand for services that's generated by having a strong military economy in your
Mm,
midst.
mm,
But it benefits from the resources sector. It benefits from tourism. It's got an international airport. It's got a strong and major export port, shipping port. There's manufacturing happening there. There's major universities. It really ticks all the boxes, and it's had the additional attractive quality of affordability. Prices have risen there quite a bit in the last 1 to 2 years, so not as affordable as was, but still plenty of options for people to buy in those lower price ranges
mm,
and decent rental yield.
mm. One thing I just mentioned about defence, Terry, I think I might have sent it to you the other day. It just been a recent announcement by the ADF saying they're sending another, I think it's 600 or 700 defence personnel that are going to be relocated to Townsville. So when you add, say, another 600 or 700 people, it's not just those individual defence personnel, but it's their families, their partners, and their kids. And as you say, the economic impact is not just one, it's one plus two or three or four, depending on the family members. So that stimulates a lot of local economic activity and obviously demand for housing too. Mm,
Demand for housing, definitely, but demand for everything. Those houses need to be furnished. The families need to be fed. So, it just ripples throughout a local economy
mm,
majorly. So it's already a big factor for Townsville, but it's just been supercharged by the
mm,
factor that you've just mentioned.
yeah. And do you have any thoughts on why you'd recommend Townsville versus Cairns, for example? Because my answer to that question would be that I think, from my perspective, Cairns is far more tourism reliant.
Yeah.
It's only another hour and a half north or so, but it doesn't have the diversity that Townsville has, right?
It doesn't, and that's been the weakness of Cairns. Um, I have to say that the political leadership in Cairns is fully aware of that fact, and they have been trying really hard to try and attract new industry to Cairns to diversify its economy. They're aware that they're vulnerable as an economy and as a property market through their reliance on tourism. So there's some progress has been made, and the
Mm,
Cairns market has performed pretty well in recent years.
mm,
But if I had to make a choice between the two, Townsville is going to win that contest because of the strength and diversity of the economy. It's so important
mm,
of long-term capital growth.
Excellent, cool. All right, Terry. We've got a lot to get through. Let's jump locations. Let's go now a little bit further south to Mackay. Tell us why you've got Mackay on your radar.
Mackay is really jumped in onto the radar screen of buyers of all sorts, both home buyers and investors recently. Affordability, lifestyle, you got that combination, then you're going to attract buyers of all sorts. One of the most compelling trends in Australia in the last decade, and it's still very strong, is the one we call the exodus to affordable lifestyle. So Mackay's got that. It's on the coast. It's got a magnificent river that runs through it. It's offered a housing affordability and a great lifestyle. So all those things mean that people want to go and live there, but also investors have been interested because it's offered affordability and good rental yields
Mm,
and rising capital growth. So it's sort of ticking all the boxes. And I also let's not forget that there are unit markets in these places for people who find Mackay medium price in the various suburbs range from sort of mid fours to the low sixes. But if that's too high, and some investors starting out, it is too expensive, you can consider units in that market, and they've performed very well on capital growth in the last few years.
mm,
Don't be misled into believing that you don't get capital growth from units. That's changed massively in recent
mm,
years, and Mackay is a good example of that. So
mm,
the economy isn't quite as diverse as Townsville we've just been talking about, but it does have some diversity. It's strong on tourism. It's strong on agriculture and surrounding areas, and it also gets some major benefits from the resources sector. Now, those can all be volatile sectors, and if Mackay had just one of them, then you'd be worried. But it's got three of those and more
mm.
in its favour, so it's got some
Yeah.
strength.
I think on the mining front too, I believe some research you might have done. There's Kevin's Corner and Alpha coal mining projects, like a $12 billion project, and Capricornia Energy Hub. And there's also like $1 billion being spent on transport upgrades as well. And there's also an extension to the Mackay Base Hospital, about a $250 million expansion. So all of those, activities require employment, they require more resources, and you get that multiplier effect through the economy from that sort of infrastructure investment there. Mm.
That's right. And yeah, and the word infrastructure that you've just mentioned also important. Mackay does have a substantial infrastructure spend happening, and that's always something to look for in these sorts of regional cities.
Mm. Yeah, okay, fantastic. All right, let's jump now a little bit slightly further south to Rocky. Now, Rocky's a great climate, pretty warm area, but houses are there's quite a diverse range of house prices there. You've got 360 to 610, very
Yeah.
strong yields. Tell us what's the play in Rocky?
Like a little bit similar to Mackay, probably a little bit. Its growth cycle started a bit earlier than Mackay, been very heavily targeted by investors, and it's a very busy market. But that needs to be said. If you're wanting to buy in Rockhampton, you're going to find it very competitive, but still some legs to the rise of the Rockhampton market. Again, you've got that strength of the economy. It's an important centre for agriculture. It's marketed as the beef capital of Australia. That's a major factor, obviously, from surrounding areas, but it all feeds through Rockhampton. It's a major centre for government services. It's kind of the capital of central Queensland as far as government offices and services are concerned. Tourism is strong. Yeppoon, which is a very popular coastal area, is not far away. So it's got all those different things. Again, it gets some impetus from the resources sector. It's not that far away from Mackay, in fact, so they both get pumped up when the various mining activities in central Queensland are working strongly. So
Yeah, I mean, its population probably the next 10 years is going to nudge 95 to 100,000, and there's quite a few infrastructure projects. There's also a wind and solar farm. It's about a $3 billion project investment in that type of renewable energies in that area. Also some major upgrades to the Rockhampton Ring Road. Um, and yeah, all of those kind of things. There's also $100 million Rockhampton Townsville rail expansion, and that's going to improve transport links to the area. So, as you say, it's got a mix of infrastructure drivers and lifestyle drivers that are going to boost that town. Mm.
and it's got a range of price points. You've got suburbs like Bersica, where still even with the growth that's happened in the last 1 to 2 years, it's still in the 300,000s. It's an older suburb with lots of sort of older Queenslander cottages. But for people with a buy and add value strategy, through renovation, that can be a place to
Mm.
focus on, where you can buy relatively cheaply and add value through a renovation. If that's your strategy, it's a good place to look. One thing that needs to be said about Rockhampton applies also to Mackay. These regional cities are built on major rivers. You've got to be mindful of the flooding factor. Those rivers are major assets. They can be detrimental in times of flood, but contrary to the impression you might get when you see the news footage on TV, it's only a very small proportion of a place like Rockhampton that gets directly affected when the river does flood. But you've got to be mindful of that. Make sure that you're buying in areas that are outside the flood risk
I'm,
zone, which is most of Rockhampton, in fact. But you just got to keep it in mind.
I'm really pleased you raised it. That was the words literally on the tip of my tongue, Terry. I was just going to explain to our audience that one of the things we do in buying in any of these locations is we look at the flood maps, and we obviously do our due diligence to make sure we're not putting clients into a high risk area. The same applies to Brisbane. A lot of people have this false belief that all of Brisbane is going to flood, because they just see the dramatic, news footage that the Brisbane River's rising and it's going to affect. But there's literally, 0.5% or less of the properties that are impacted in those areas. So,
Yeah.
all right, let's jump to Bundaberg. So, here we go. Bundaberg, a place where my favourite ginger beer is made, Terry. Don't know if you like that one.
Are you sure it's the ginger beer or is it the rum, Rich?
Well, who knows? I think no, I'm the ginger beer man, mate. So
Okay.
yeah.
But they're actually important points because there are several major businesses that are headquartered in Bundaberg. One is the one that makes the ginger beer, and the other one is the one that makes the famous Bundaberg rum. These are seriously major
Mm.
not just national businesses, but international businesses, and
Mm.
they employ a lot of people. So they're an important part of the local economy of Bundaberg. Bundaberg's one of the most prosperous regional cities I've ever been. I know it well because I've visited many times. Um, but what struck me about Bunbury is how prosperous it feels. You know, sometimes you go to a place and it feels a bit down at hill, and there are empty shops in the centre of town. Bundaberg's the opposite. It's everything's freshly painted. The public areas are beautifully manicured. There's no empty shops. And I think it's because it's a wonderful area for growing stuff. You know, it's a wonderful market garden area. And if you look at the stats for Bunbury, some of um, the, the, the the majority of certain types of food products come from Bundaberg.
Mm.
It's also got tourism. It's close to the coast. Areas like Ballarat. It's got the famous Mon Repos turtle sanctuary, which a lot of tourists visit to learn about that and to witness. You can actually go out at night with guides and see the turtles coming ashore and laying their eggs.
Mm.
So it's got tourism, impact from the resources sector. But the big kicker for me, for Bundaberg, we talk about infrastructure. For me, the most influential type of infrastructure of all is major new hospitals. They thousands of jobs in building them, but double the number of jobs in running them. So if you've got a $1.2 billion hospital being built in your midst, as Bundaberg does right now, there's going to be thousands of people coming from other parts of Australia and other parts of the world to live in Bundaberg and work in that facility, and that's going to massively pump up the property market there. So we've seen some pretty good price growth in Bundaberg in recent years, but when that facility is finished and operating, it's going to just take Bundaberg to a whole new level, as a similar factor did on the Sunshine Coast a few years ago.
Mm. Yeah, really good point. I mean, attracting medical staff, doctors, anaesthetists, all those, they're typically higher paid type professionals as well. And so getting higher paid professionals, they demand better quality of housing. So that has a definite flow-on effect to the property market.
Yeah.
And in addition, there's also a lot of road expansions and other solar farms that are also being built in the area, Terry. Mm.
Yeah, so it's one that's not as well known as perhaps a Townsville or a
Mm.
Rockhampton, but it's definitely worth considering for investors looking for some really strong capital growth in the future.
Mm. Excellent. All right. Our next town point of call is Gladstone, a little bit further south than Rockhampton, but not far, about an hour a bit south. Rocky's got quite a lot of big industries, big aluminium smelter, a lot of other processing industries, and it tends to have had a bit of a boom and bust kind of rocky road over the years. But tell us why you think it's got where it's good for buying at the moment, Terry.
Yeah, well, and the cautionary tale is its boom bust past, but I think it's grown beyond that now. It's still an economy that is heavily reliant on the resources sector in various ways, but it also has a tourism economy. It's a stop jumping off point for some of those tropical islands off the coast of Queensland on the Great Barrier Reef. Um, well, we're seeing new kinds of industries starting to pop up, alternative energy in particular. And one of Australia's richest people, Andrew Forrest, has been working on establishing like a hydrogen energy project there,
Mm.
multi-billion-dollar project. So those sorts of things are happening in Gladstone. It's been very affordable and with really good rental yields, starting to really pump strongly. For those who are finding, well, even if those low prices on the screen for the typical houses in Gladstone are a bit beyond your reach, there are some more affordable options in the unit market there.
Mm.
But very low vacancies and good strong rental growth.
Mm.
So possibility of buying well with a good rental yield with
Mm.
prospects for
Mm.
capital growth in the future.
Mm. Yeah, I've owned properties in Gladstone before and done well. It's as you say, it's a market that's matured. You know, originally a lot of investors just went in there purely because of the back in the day it was almost $80 billion worth of money going into the LNG projects. There was supposed to be three of them, but only two of them got built. Um, but it has definitely matured. Big aluminium smelter there, so I think it's got some real merit. Not far from there is Calliope. Have you got any comments on Calliope at all, Terry? Is there's another location?
Yeah, it's actually part of the city of Gladstone, so it's in the local government area. and it's done very well. It's a little bit inland. It's an affordable alternative with
Mm,
a different kind of lifestyle, a little bit more hooked into the agricultural economy. So it's worthy of consideration for people who are looking for an alternative, maybe a little bit more affordable than Gladstone. Not that
mm,
Gladstone's expensive. I should point out that those sort of price ranges on the screen, that's sort of the typical mainstream in Gladstone. You do have some markets a bit more expensive, like Tenham Sands is the probably the most expensive suburb in Gladstone, and as the name suggests, it's on the beach, and so it's where the more expensive housing exists. But yeah, Calliope is an affordable alternative to
mm,
the city of
mm.
Gladstone.
Yeah, I don't personally think it's going to have as much growth as Gladstone itself, just because it's sort of a more of a satellite suburb of Gladstone. If it was me, I'd be buying in Gladstone itself, but that's just if you were choosing that area. But yeah, but certainly got some definite drivers going forward and good population.
Yeah.
So Terry, let's jump states. Let's head down to Victoria and head down to Geelong. And Geelong has often been likened to sort of the Newcastle of New South Wales in many ways. More cheaper prices. It's on the bay, great water area, good football team. But tell us, what's the attraction of investing in a place like Geelong, Terry?
Yeah, well, it's really the economy and proximity to, of course, to Melbourne. Um, it's an affordable lifestyle alternative to downtown Melbourne. It's a peninsula city, so it's almost surrounded by water, so it's got that lifestyle factor.
Mm,
It's got a good level of affordability compared to Melbourne. Its economy is really strong, and one of the great things about Geelong is that it's transitioned really successfully, like Newcastle that you mentioned, from the old economy, the old smokestack economy, to the
mm.
new one. I remember there were times years ago when the end of Newcastle and the end of Geelong was forecasted,
Predicted, yeah.
which has a tendency, as we all know, to go a little bit overboard with its headlines at times. But Geelong used to be about car manufacturing and other smokestack type industries, and it very successfully transitioned to the modern economy, where it's now all about education, health services, and IT is very strong as part of the Geelong economy. It's also the national headquarters for the NDIS, which is another major sort of government enterprise. So all those things provide employment and generate economic activity.
Mm,
I tend to think that if you own a property in Geelong, I'd be inclined to hold it very long term because it's always going to be a performer.
mm,
Um, right now, it's what we call a second wind market. It's had strong growth in the past. It's been sort of flatlining a little bit in the last couple of years, but it's really poised for its next phase of growth, and that's what we mean by second wind.
mm,
The market previously sprinted, paused to catch its breath. It's got its second wind. Now it's going to take off again in another fast trot or a sprint.
mm.
Um, and it's going to be a good long-term performer.
I
Um,
think the thing to note for any investor there, if you've seen obviously just comparing one city to another or location, the yields are not going to be as strong as what you're going to get in Queensland. Yields are, 4 to 5%. They're not, 5 to 6% plus. So, and that's just going to be a factor right across the board in most areas. As we see price growth, you see, more substantial capital growth at the expense of some yield. But I think it's a location that's very affordable, got a lot of attractions to it, and I think it's going to do really well in the next decade. Mm,
and I think we need to make people aware that the taxation policies of the state government is something to be aware of you're investing
mm,
anywhere in Victoria. Stamp duty is high,
mm,
land tax is higher than most places, so that's something to keep in mind. But for people who can get beyond that mental hump,
mm,
there's opportunities in Victoria right now because we haven't seen the level of price growth there in the last 2 years that we've seen in Western Australia, Queensland, South
mm.
Australia.
Yeah,
So
yeah.
to buy well ahead of future growth, and we're starting to observe that buyer demand is rising. When that happens, prices will follow.
Definitely. And there's a massive transport infrastructure project, the $10 billion Westgate Tunnel. So that's going to really improve, like any kind of tunnels, to improve travel time and access that has a significant impact on property values, Terry.
Yeah, indeed.
Mm. Okay, let's also now jump slightly inland in Victoria and head over to Ballarat. So, can we find any golden suburbs there, Terry? Excuse the pun. But tell us what's the rush with Ballarat at the moment? Is there any good locations you recommend there?
Well, the thing about Ballarat is that it's been a very good performer in the past, but in the last couple of years, its prices have dropped a bit. And as
Mm,
part of the malaise that we've seen in regional Victoria, um, temporary, we believe. It's a really strong regional city with good prospects for growth, and we're starting to see buyer demand rising. But because prices have come back a bit in the last couple of years, there are at least seven suburbs with median prices are in the 400,000s. So that's pretty affordable buying.
mm,
The yields, as you've commented, aren't as strong as some of those Queensland regional cities, but they're okay, and it's very much a second wind market. Opportunity to buy really well while prices are down,
mm,
but sales activity are now starting to rise, and that's the precursor to a recovery in pricing. So the timing would be good to get into the Ballarat market now, provided you believe it's that market's got a future for capital growth, and we certainly think it does.
mm. It tends to follow like the other markets we've talked about. They tend to have like a renewable energy infrastructure. So there's a wind energy, the Golden Plains wind farms, about a $3 billion investment there. It's also got another investment in the Ballarat-based hospital, a $655 million expansion of healthcare in the area. So, and also upgrading the Ballarat transport lane. So we tend to get these energy projects, road projects, and hospital projects, which is a catalyst for growth in all these areas, right?
And again, I just love when there's a big hospital project happening in a location that really piques my interest because I just know what that does,
Mm,
both in construction and
mm,
particularly when completed. The alternative to Ballarat, of course, is Bendigo. Very similar in a way in size. A very important regional city like Ballarat. It's been gone through a couple of flat years. One of the things we're seeing is that that exodus to affordable lifestyle. Melbourne's population has grown because they get a lot of overseas migrants, but at the same time, it loses population to internal migration and people moving to areas in the regions for a different lifestyle, for a better level of affordability, but not too far from the capital city. So Ballarat ticks that box, and so does Bendigo. And in fact, the numbers of, in terms of people moving from Melbourne to regional areas are particularly strong for Bendigo at the moment, which is another regional city that offers similar pricing and similar prospects for growth.
Fantastic. Okay. I know we're going through this at lightning speed, Terry, but there's still a bit more to go. Next one is Latrobe City. Let's have a look at Latrobe. Tell us what we're going to find there and what's the drivers in Latrobe City.
Yeah, it's uh, just outside of the greater Melbourne area, down in the far south east. Towns like Traralgon, Morwell, Moe, Churchill. Again, solid local economy, investment in infrastructure there, including a major hospital project recently completed. Very good affordability there. Those towns like Morwell and Moe, very down marketplaces. But what we know to be true from recent history and even longer history is that affordable places that are considered down market do show really good capital growth because people target them for their affordability, provided they've got all the basics, services and infrastructure that people are looking for. So those places have that. Traralgon is the largest and most expensive of those Latrobe City towns, with a median price around 500,000 now. So if you're looking for something a bit cheaper, you can buy in the 300. There are not many places in Australia where you can buy in the 300,000 houses with good prospects for growth, but
Mm,
Moe and Morwell do provide that. And they are second wind markets that we've described earlier, had
mm,
growth in the past, flatline for the last couple of years. We're now starting to see buyer demand strengthening, and therefore we expect prices to start rising again.
mm. And still seeing good yields there. I mean, the property growth, 5-year average being almost 14%. So I think properties that are coming off that lower base have a higher propensity to grow faster and quicker for a period of time until it catches up with the other medians. But I think a lot of these markets at that cheaper end certainly have some immediate equity uplift, which then investors can then use to leverage into more expensive markets as well.
Yeah.
Hmm. Okay. Thanks for that. Let's go across the rest of to the other side of the country to WA, and let's have a look at Rockingham. So, tell us what you love about Rockingham, Terry.
The fact that you can walk your dog along a beach and throw things into the water. And look, it's the thing about Rockingham. Rockingham is the name of a local government area in the south of the Greater Perth area, but it's also the name of the main suburb of the city of Rockingham. There's other suburbs there like Secret Harbour and Hillman and others, and they're suburbs that either front the coast or very close to the water, and until recently, very, very affordable places. As we all know, Perth has gone through 2 or 3 years of extraordinary price growth, and we have to say that most of those suburbs in the city of Rockingham now have median house prices in the 600,000s. So that major attraction that previously existed has been eroded by the price growth of the last couple
Yeah.
of years, and the yields, as the prices have risen, the yields have come down.
Yeah. And I think
Thing
one of the things to mention is the big naval base expansion, the Sterling Naval Base. I think it's like a $8 billion investment. Is that right? I think into that area. So it's quite significant, which is going to bring a lot of defence personnel.
Yes, and it's significant for Perth generally. The weakness of Perth, a little bit like when we talk about, say, Gladstone, is that the economy in Western Australia and Perth, its capital, has been so dependent on the resources sector, and they've been mindful of that. And there's been quite a lot of work at a state government level to try and change that so that the local economy and therefore the property market is not quite so vulnerable to the ups and downs in the resource sector, and investment in the naval base, in shipbuilding, and in other manufacturing industries, and a high level of investment in infrastructure spending has helped to strengthen and broaden the economy in Perth. So it's pretty clear that that Perth boom has peaked, and but so 10, 15 years ago, when we had that extraordinary resources investment boom, Perth had a boom and then prices fell for the next several years. We don't expect that to happen this time because this economy is stronger. The pricing that Perth has reached with this latest boom is probably where it should be in terms relative to other cities. So we're not expecting to see any price decline in Perth. We just think it's going to be flatline for a while.
Yeah, okay. And also just on Rockingham, we're expecting to see pretty significant population growth. So the population in 2021 was around 135,000 people, but by 2036, over the next 15 years, it's expected to go to 186,000. So quite a significant number increasing in population there.
Yeah, and there's suburbs like Baldivis where there's a lot of construction of new housing estate. And that's one of the places where that population growth is occurring. But good transport links to central Perth, both motorway and train, so it's got that in its favour. And also close to what's arguably the biggest single employment zone in the Greater Perth area. I know a lot of people think the biggest number of jobs are in the CBDs, but most cities they're not. Most people are employed in suburban jobs zones, and the Kwinana zone, which is a little bit north of Rockhampton, has got quite a lot of industry there. All the big resources companies have major presence there. There's tens of thousands of jobs in that precinct. So if you're living in an area like Rockingham, you're more likely to be working there than, say, travelling into the CBD of Perth for a job.
Very good. Let's jump to another WA town, not too far away, in Bunbury. So tell us about Bunbury and why that might be an attractive location, Terry.
Yeah, the largest of the regional cities of Western Australia, and it's attracted a lot of buyers, both home buyers for its coastal lifestyle and affordability, as well as investors. The cheaper end of that Bunbury market, suburbs like Withers, for example, have attracted a lot of investors. You can still buy there in the high threes, although you're more likely now to be in the 400,000s. the yields, as the prices have risen, the yields have come down a bit, but you can still get your 6.5%. And there's always the option of the unit market, although the units aren't. You usually find in most places that units are cheaper than houses. Not necessarily the case, because most of the sort of unit market in Bunbury is sort of clustered pretty much in those areas that the image on the screen shows, around the harbour, close to the water, close to the main lifestyle aspects of Bunbury. But it's yeah, it's a great lifestyle city, but also a city with a strong connection to the industry that makes Western Australia pump, the resources sector, etc. And it's got a very important export port.
Fantastic. Cool. Excellent. I want to leave time for questions as well. Everybody's itching to ask, but let's go now to South Australia, our last location, Terry, Mount Gambier. What are we got? What are we looking at here on the screen? Are they crater lakes that have been formed by meteors?
Yeah, but not recently, fortunately. Look, it's part of the attraction of Mount Gambier. It's got a tourism industry. Those lakes are quite amazing. So things to visit and to see, but it's got a strong and diverse economy. It's the largest regional city in South Australia, which I have to say is the unsung hero of the Australian property market. Never gets talked about, but it's been one of the best performers. It just keeps performing regional South Australia. We've got places like Murray Bridge, Port Lincoln, the towns south of Adelaide like Victor Harbour, and nearby towns along the coast there. We've got the Iron Triangle towns, which are very much resources economies, like Whyalla and Port Pirie and Port Augusta. But this one is probably the strongest, as well as being the largest, because it's not really a resources town. It's a town that's built on other things. There's manufacturing, there's education, there's medical services, there's tourism. It's close to the border with Victoria, so it's on the main road connecting with people who travelling from, say, Melbourne to Adelaide. And it's got that level of affordability, both for its housing and its units and townhouses. So right now it's a steadily rising market. It's had some good growth, but there's more to come, I think.
Yeah, it's been remarkable to watch how just Adelaide as a city as well has risen through the ranks, particularly the last 5 years since COVID. We've had a significant exodus of people heading toward South Australia based on affordability and lifestyle and other reasons. And yeah, it's remarkable to see its median price, getting up toward almost $1 million now. So,
And it's something a lot of people probably still don't appreciate. Now, we talk a lot about the economy as being the most important thing. Our reports spend more time talking about the economy than we do about the property market, because that's what creates the demand in the property market. And a lot of people probably aren't aware that the South Australian economy is one of the strongest in the country. It's historically been considered to be a bit of a no-growth economy. But in the last several years, it's ranked either the number one or number two economy in Australia in the report that we always read, which is the State of the States report that CommSec publishes every quarter. They use a range of metrics to rank the economies of Australia. South Australia is ranked either first or second every quarter for the last 2 years at least. And that's underpinned the property market in Adelaide's why it's grown so much, but also other parts of South Australia like Mount Gambier have also been positively impacted by that.
Excellent. And Terry, just in terms of places to sort of hold up the stop sign for investors, there's a bunch of no-go zones. And, we often talk to our clients about avoiding mining towns or one industry towns, avoiding purely tourism towns, or just towns that have got, a small dot on the map. So have you got any examples of locations? Would you say like Mandurah or Longreach or, those sort of areas might be something places you'd avoid?
Yeah, well, anywhere where the economy is just one thing, if it's just agriculture, then you're vulnerable. If there's a drought, for example, everything suffers, and including the property market. If it's just tourism, last Christmas we had really bad weather in Queensland, and people cancelled their holidays. So if you're a coastal town where it's all about tourism, you suffered as an economy, but also as a property market. But mining towns is the one that's got the biggest red flag, because investors sometimes get attracted to the affordability and the really high rental yields you can sometimes perceive to exist there, but they're so volatile, and people have done their dough in places like Moranbah in central Queensland, coal mining town, where median price went to 750,000 and then it dropped to 150,000. I mean, that sort of thing doesn't happen in Australian real estate, except in these sorts of places.
Yeah.
Port Hedland in Western Australia and Karratha also had similar things. But just recently, we've had two events in iconic mining towns, which are cautionary tales. One is Mount Isa in far western Queensland, very iconic place, very much a resources economy, and the major employer there is shutting down one of the major mines. It's going to cost thousands of jobs, and that's a huge problem for that community, but also for its property market. And the other one is Whyalla in South Australia. We touched on very briefly. The biggest employer there is the steel mill, and most people who read the media will be aware that there's a very wealthy, or supposedly wealthy, UK billionaire, Mr. Gupta, who bought the steel mill there and had big plans to expand it, and but that's gone pear-shaped, and the state government and the federal government have had to step in and prop up that operation, because if it went broke and thousands of jobs were lost, it would be disastrous for a while. But it's just an example of what can happen in those one industry towns, and how dependent they are on the ongoing prosperity of the big employers that are related to the resources.
So I think, Terry, if I could summarize something you're saying, which is a critical point for our audience to understand, is that property demand is a derived demand. Property demand comes from jobs, it comes from infrastructure, and it comes from population growth. And the more those things work in concert in a well-functioning, diversified economy, the stronger the property market will be. And conversely, you mentioned areas like Karratha, Port Hedland. I remember distinctly when I was doing a lot of presentations at the property expos, I'd get these property spruikers come up to me and say, Rich, you should be putting your clients into these, two-bedroom units up at Karratha. You can get 15% yields, and they were trying to flog them at $1.2 million and saying, but you'll get a 15% yield. So I didn't touch them like for a barge pole because I knew they'd be problematic. Sure enough, 5 years later, they're worth about a third of what they were sold for. So be very careful about buying, those brand new off the plan properties in mining towns. It could be an absolute disaster.
And I have to say, it's the only type of market where that happens. Australia real estate has a fantastic record for ongoing capital growth over time. The only time where we see property values collapse is the examples you've just raised. It's those mining towns. So yeah, avoid them like the plague. There's so many good places to invest in Australia for growth. You don't need to take that sort of risk to get really good results with residential property.
Great. Well, look, we'll come to questions in about 2 or 3 minutes. I just want to quickly go through a couple of examples, Terry, of the things that we've bought for our clients. And also just talk about the various steps that any buyer, investor or home buyer needs to go through to buy well. But these are the 7 steps you need to follow if you are going to be a savvy investor. And these are the same 7 steps that we take each of our clients through in the whole buying process. So first step is not just to pick a location. First step is to think, what is my strategy? What is my goal? Am I buying for capital growth? Am I buying for yield, or a combination of the two? And get super clear on what your outcome is that you want from this particular investment, because everybody has different needs and different goals. Everyone's on a different income and has different capacity. So it's really important to get clear on your strategy, which we can help our clients to work out. Secondly, make sure you research the area thoroughly. Terry, your reports are fantastic. We use them for our clients, and we also combine that with our own internal research and on-the-ground research from our local buyers agents who live and work in these areas. We then start to shortlist and search for suitable properties. And that's a painful process. That's why we exist, Terry, because finding a property and researching a market can take 6 months, in which case some markets, as you see, can jump up very, very strongly in a 6 to 12 month process. Then it's a matter of evaluating and selecting the best one to buy, doing your due diligence, making sure you negotiate well, and then closing it out and getting a property manager in place. So they're all the 7 steps that we take each of our clients through. If you are thinking about doing it on your own, fantastic. But if you'd like our help to do it, these are the key benefits that we can offer as a buyer's advocate. We can help you to really get that roadmap right, give you access to off-market properties as well, save you a heck of a lot of time. Our average turnaround time from when a client engages us to when they've bought a property is around 1 to 2 months or less. So it's a fairly efficient process because we've got the network and know who to go to find the right kind of stock. And then we just give that local knowledge, those local insights. We help people crunch the numbers and essentially give people a lot more confidence to make the right decision and avoid the lemon properties. There's still dud properties in good areas, so you've got to be very careful. What is the cost of our service? We work on a fixed fee basis. It's roughly about 2% for any property under $1 million, but it's a fixed fee. So, for example, a $650,000 property, we charge a total of $14,000 plus 200, including GST. You pay $3,300 upfront, and that's included in the overall fee. But for that, you'll have a personalised buyer's agent working with you every step of the way. For anyone watching or is registered for this webinar today, we do have one special offer that I'm happy to offer, and that is that we'll give a 10% discount off our standard engagement fee. So that'll save you a little bit of money if you engage us before 30 June. So you would need to sign our buyer's agency agreement, say, yes, I'm keen, sign that and get started before 30 June. So that's an offer. If anyone wants to take that up, let us know. We'll be sending around an email to that effect after today. And I'll just give 3 or 4 examples, if I can, Terry, of properties we've bought, and then we'll open it up for Q&A. But just to show you what we've recently bought for clients, we bought this one in Townsville. This is back in February last year. Our team found a property here, a nice 4-bed, 2-bath, 2-car house. It was renting at the time for $500 a week. It's now been valued at $625,000. So in just over 12 months, that investor's made $125,000. So very significant uplift. You think about how long it would take to save $125,000, and that could take, 5 to 7 years. So just buying one property has got this person on the property ladder significantly, and they're going to be using that increased equity to leverage into their next purchase after that. This is another one we also did in Townsville. It was a 3-bed, 2-bath, 2-car. We paid $445,000 for it in May last year, just under 12 months ago, and today it's valued at $585K. So again, around $135,000 improvement in value. So it's not to say this is a precedent, this will happen every time, but this is just an example of using the right knowledge to buy well, and you can make significant gains. Another example of a property we bought in Mackay in July last year. We paid $524,000. It's now worth $610,000, and a pretty significant yield too, Terry, right in the zone of what you were saying, around a 5.7% yield. But again, great significant uplift in value. And the last one we bought is in Bunbury. Last year we paid $543,000 for this nice little 4-bedder, 1-bath, 1-car home. Now being valued at $615,000. So again, made around 72 grand in just 6 months. So that's an example of a fast rising market with a very decent yield. And one we just bought a couple of weeks ago, still in Townsville. We got this around 25 grand under market, just because we knew the agent was a bit lazy, and we're able to nab it before it went on market, which is always great. We paid $550 for that one. It's renting only for $510 a week, but that'll increase to around, I forgot to put the number there, that'll increase to about $565. I forgot to put the number in, but they'll increase to around $565, so it'll get over the 5% yield mark. And we found that within 3 weeks of engagement. So a pretty decent return. So there's some examples. I'm going to open it up for Q&A. We'll be sending around the slides. If you do want to get in touch, my details will be in the email as well, and just reach out any time. So I'll just bring it up. I'll stop the share, and then I'll just bring up the Q&A. Oh, we've got 14 questions already, which is fantastic. So Terry, turn up the mic. He's done that. Gents, what DHA in Townsville, due to defence advantage, McCain's is going to major defence grader. Can you speak to this? Any thoughts? So Mark is asking basically is, if Cairns gets a major upgrade in defence, would you recommend it?
It would certainly go a long way to changing the perception of it. As I said earlier, Cairns' actually market has done pretty well lately. It is working really hard to diversify its economy, and if there's an expansion of its military economy, that would be a major boost, and would go some way to making it a little bit higher on our list of recommendations, definitely.
Okay. Bill Yanko's asking, how do you keep tenants and property managers under control when you live nowhere near Rockhampton or the town? Great question, Bill. I know this because I've got properties all over Australia. The thing is to be really clear in your communication with your property manager. Find out what service they really offer and keep them accountable. Now, if they don't deliver the service you want, feel free to change. Find another property manager. We can recommend some that we use. But property management's a tough gig. Finding a good manager is really hard because there's a big turnover. It's a thankless job. Other little tip I'd give is thank your property managers every time you interact with them. Be really respectful and courteous and thank them a lot because it's a tough gig that they're doing. So it is a matter of keeping them professional, being kind and courteous, and making sure that you fix repairs as quickly as possible and getting quotes as well.
Absolutely. I endorse everything you've said. I go out of my way I value a good property manager really highly. They're worth every penny of their fee, if they're good. And I make sure I let them know that I value what they do for me, because a good property manager just makes your life so much easier.
Mm.
And one of their most important roles is to make sure that you have a good tenant. And if you're buying in the right areas where vacancies are low, you should have a range of choices when the property is available for rental. And you should be able to get the best tenant available with the best track record of paying the rent and looking after a property. So you shouldn't have a problem if you've got a good property manager.
Robin is asking our opinion on fixer-uppers, things that require a lot of work but are marketed well below existing properties. Are they worth the time and effort? Well, if you want a renovator's delight, go for it, but be prepared to probably spend a bit more money than you anticipated. And particularly if you're doing renovations remotely, it is a lot harder. So my advice would be I'd prefer to only do renos where I can, manage the trades. I have done renovations remotely, but it is harder. So you're probably better off and going to save more money to buy existing properties in reasonable condition and do minor renos than do major renos. What would you say, Terry?
I would agree with that. I've never pursued a renovation strategy ever, because I think you've got to be very handy yourself. And as you said, I think you've got to do them in areas close to where you are living, so that you can perhaps be involved in the process yourself. If you're handy, if you've got trade skills, or at least if you know the local tradespeople, you can manage that and get involved and do it more affordably. That's why I've never done it, because I just don't have that interest or that skill. But I think renovations have it's a little bit like government infrastructure projects. They always seem to cost more than the original.
And take longer to deliver. Yeah, watch out.
And it can blow up financially for you and not get the result you're looking for.
Yeah,
You've got to know what you're doing. You really do have to know
yeah,
what you're doing to do that
yeah.
well.
Right.
And those that do know can do very well out of it.
Yeah, great. Steve's just reminding you to keep close to your microphone, close to your head. Um, Kedar is asking, investors have been fleeing Victoria. Any guidance on what's wrong there? And is it still a risky to buy in Victoria, or can it get any worse? I'll answer this one first, Terry, and you add your thoughts. But look, Victoria's state government is still in debt. They've had a really difficult time during COVID. It wasn't well managed. So they've gone after property investors and slightly raised the land tax, which look is not dramatic. It is an increase, but it's not absolutely, get out of there. But a lot of investors have reacted negatively, and there's been a big sell-off of investment properties. So in my mind, it's actually a perfect opportunity to buy in Victoria because it's a market that's been sluggish. It's at the bottom of the property cycle. There's a huge demand for rentals. So for me, I wouldn't be fleeing Victoria. I'd be flocking to Victoria. But Terry, your thoughts?
Yeah, I think that's a very intelligent way of looking at it. I understand why people have exited, because the state government has been quite dreadful, actually. But not only has it increased taxation, but in the process to justify its actions, it has demonised and vilified property investors, and it's not reasonable and it's not fair and equitable. But as you point out, that the flip side of that is opportunity. Those markets have not shown capital growth for the last couple of years. Places that we mentioned in our presentation, like Ballarat and Bendigo and Geelong, are places that will in the future deliver really good capital growth. They're really strong regional cities with strong economies. they will perform. So it's an opportunity to get into that market now and buy well. All the indications are that those markets are starting to rise. So now is the time to take action, I believe.
Mm. Someone's asking, we're talking about a lot of coastal Queensland towns which get cyclone floods, fires. How does that impact insurance premiums? It just does. Like your premiums are going up everywhere, not just in Queensland. So, I've got a property up at Early Beach and I pay about $3,100 a year for the insurance, and it is just what it is. So I think, just get extra quotes, make sure the property you buy is cyclone rated and has good bones, so it will withstand those kind of things. Don't buy in a flood zone. Don't buy in a fire zone would be my advice.
Yeah.
David's asking, what suburbs around 600K would you recommend in Melbourne for a standalone house? Hmm.
Yeah, look, one that stands out again for the reasons we previously discussed. I like Frankston down in the southeast. There's different parts of the city of Frankston. South Frankston is $1 million suburb, but there are cheaper areas like North Frankston. You can buy in that price range in that market.
Hmm.
It's got a lot of ticks a lot of boxes, but the big kicker again is a very, very big hospital project happening down there. It's going to really pump up that market. So that's one place I would suggest. And then you've got out in the west, Melton, the city of Melton, Melton, probably the most affordable part of the Melbourne market, but not that far from the centre of Melbourne, in fact, and good connections with motorway and train. So worth considering as well.
Okay. Mark's asking, Rockingham's set a requirement for 750 houses to support defence. Thoughts re this market peaking? Well, I think we sort of covered that and said previously it's not peaked. We think it's going to slow like the rest of WA, but it certainly hasn't peaked. I think there's a lot of opportunity to go forward there, Terry.
Yeah, just be careful what you're buying. We've seen far too many people diving into the Perth market generally and buying without due diligence, buying recklessly, I think, just to grab a piece of that action. You've got to buy sensibly and with due diligence. You've got to do your building and pest inspections and make sure you tick all those boxes to make sure you're getting something that's not going to be a problem in the future.
We're getting a lot of questions around individual suburbs like Tumut in the Snowy Mountains. Do you think there'll be growth in Tumut, New South Wales, Terry?
Honestly, don't have an opinion. I'm not aware of anything that's particularly a major driver. It's probably one of those one industry type economies that you need to be a little bit wary of. My question I would always pose to people, a lot of people sort of, I suppose, fixate on a particular location for whatever reason. And I always ask the question, do you think that this location is the absolute best place that you can buy in Australia right now? And if the answer is not an emphatic yes, then keep looking. I really don't think I could argue that Tumut is the best place you could consider to invest in Australia
Yeah,
right now.
I personally don't think it's a great area because it's a lovely spot to visit, but and do fly fishing. But I wouldn't be investing. There's plenty of other areas, Nicole, to invest in. I'm going to go quickly because there's a bunch more questions and we're running out of time. Other places in New South Wales worth investing in. I'd say, Terry, a lot of areas around Newcastle, the Hunter, Central Coast are certainly very strong in my view. I think they have some really good legs because, as we've talked about, I mean, it depends on again the budget, but if you've got say 600 to a mil, definitely Newcastle will be on my radar.
Yep. Albury Wodonga at the border with Victoria is a great regional
Yes.
city. It's very similar
Mm.
in terms of the strength and diversity of the place that say a Townsville. And you've got cities like Wagga Wagga, big, strong military economy, as well as other things, Dubbo. If you want a simple formula to follow to make money, follow the infrastructure trail and specifically New South Wales, the Inland Rail Link, which is being built to connect Melbourne to Brisbane via inland New South Wales. Towns like Wagga Wagga, Albury Wodonga are on the route, Moree, Narrabri, places to consider that are being pumped up by that.
Okay. Ipswich, is Ipswich a good area to invest in? What do you think?
Yes, it has been and will continue to be. Greater Brisbane generally is a very strong market at the moment, and it's got that 2032 Olympic horizon, which is going to create growth. The growth for an Olympic hosting city is always before the event, not necessarily after it. And Ipswich is part of that. It's the affordable end of the Brisbane market, and it's always performed well, and will continue to in the future. Lots of jobs nodes out there as well. People who live out there tend to work out there. They don't travel to the centre of Brisbane for work.
Yep. Yeah, great. Terry, someone's asking about your view on Cloncurry. Any thoughts on Cloncurry?
Oh, well, it's one of those places we were warning about earlier, really. It's it's a far western town which is about, the mining sector, and it's therefore high risk. Um, so it's not the sort of place that we would recommend.
Okay. Someone's asking about Frankston, Victoria. I'll take that one. We really like the Frankston area and the Bayside Peninsula. We're regularly buying in those markets like Carrum Downs, Cranbourne, um, Seaford. We really like those areas because, again, they're family friendly, 40, 45 minutes from the CBD. And they're still, we think there's a lot of drivers for those markets, so very strong.
And the hospital
And
project
the
also.
hospital. Always the hospital in there somewhere. Yeah.
I just love areas that have got that element in addition to other things that are
Yeah.
happening.
Yeah. Someone's asking, how reliable are the current valuations of examples you've shared, considering the properties have not sold? Well, of course, they haven't sold, so we only just bought them. But over a year, we use comparable valuations. So other relevant comparable sales is how we've come up with those numbers. So whenever we look at a property, Terry, and anyone watching, we'll always pick out 5 or 6 relevant and recent comparable sales within the last 2 to 3 months. Same process that a registered valuer will take. Emerald, Queensland. Any thoughts about Emerald?
I often wonder why people are interested in the areas that they're
No.
interested in. Why Emerald? Why, of all places in Australia, Emerald? Look, it's a market that has got agriculture and it's got mining activity. That means it's got that volatility. It's shown growth in the past, but it's not. I would suggest not a prospect for good, sustainable, long-term
Mm.
growth.
Mm. JM is asking, would you recommend a dual key dwelling with high yield in growth suburbs versus 2 separate dwellings in the same suburb? Or would it be best investing in 2 different suburbs for diversity? Well, I guess, JM, it comes down to your individual situation. On a webinar like this, I can't really give you advice based on your personal situation. So that comes back to doing a general strategy chat, but it comes down to the fact of what is your goal? If your goal is to get high yield, then we can go for high yield dwellings. If your goal is to get capital growth, then you'd go for 2 separate dwellings with higher land content in a more restricted area. So the answer to your question depends on your personalized goals. Next one, Kanwar is asking thoughts on Bundura, Mill Park. What are your thoughts about those 2 areas, Terry?
What was the first one, Rich?
Bundora.
Um, yeah, sort of a part of the Melbourne metropolitan area. I think of understanding the location you're talking about there. It's a place that does have a major university campus. I think maybe there's a hospital as well. Hospitals and university campuses tend to cluster together in major metropolitan areas. So if I've understood the area you're talking about correctly, that is a location that I would be interested for those reasons. Mill Park is sort of part of the Whittlesea local government area, and like Epping. It's always been a pretty good performer because it's got all those elements. It's, train services. It's got major shopping centre. There's a big hospital up there, an existing one, which keeps expanding. So that sort of helps to pump up the local economy. Local education facilities, close to the ring road. There's lots of jobs along, that northern sort of ring road in Melbourne up in the north there. Like the fruit and vegetable markets moved up there some years ago. So there's lots of jobs up there as well. So
Yeah, great.
those are all reasons to consider those locations.
Yeah, cool. Someone's asking, what does your engagement fee cover? Yeah, that great question. That covers the initial strategy chat and recommending the area and kickstarting the entire search process. So yeah, that's what that covers. Someone's asking, based on the numbers, can you still get neutral or positive geared properties with capital growth? Well, yes, is the answer. And probably even more so, Terry, as interest rates come down. If we get, four or three or four or even five rate cuts over the next 18 months, I think we'll start to see even more positively geared properties, depending on how much cash people are putting into these locations.
Yeah. Well, we've got a report specifically addressing that called the Pulse, and we nominate 50 locations primarily for the above average rental yields, and all places that have got 6.5, 7, sometimes more percent gross yields. But they also have to be places that have good prospects for capital growth. So we're never going to include a mining town on that list, for example.
That's right.
But those places do exist. They tend to be these days in the regional areas, but that's fine. Regional markets have been performing really well in many cases. The regional markets have outperformed the capital cities, so they can be found definitely. But one of the things I'd like to say before we finish, Rich, is we're great believers in building your team before you build your portfolio. Be willing to invest in advice and information to get the best results. You can't penny pinch your way to success. So I'd certainly support the idea that people should engage Propertybuyer to help them find the right properties. It costs a fee, but you only have to get a few months of capital growth and you're paid for that fee, and the rest is all profit. So I think it's really, really important to be willing to invest in advice, have a good accountant, have a good mortgage broker, a good insurance broker. We talked about insurance. It's high in certain places, but if you've got a good insurance broker on your team, it doesn't cost anything for them to find you the best insurance package for your investment property. So always be willing to do that to get the best results.
No, thanks, Terry. Look, I think I'm sorry, folks, we've run out of time today. There's a bunch more questions, but definitely love to answer. Someone's asking if we arrange for a physical inspection. Absolutely, we do. One of our associated team members will be inspecting properties that we recommend for clients. But Terry, I'm just going to have to wrap it up there. With so many more people who've got a million questions, and we're sorry we couldn't give New South Wales as much love, but definitely New South Wales, South Australia, and other locations, we could do another webinar. We just had to pick a price point and focus on that, and that's why we picked only those 10, 11 suburbs. But there's a bunch more areas that we buying in can recommend as well. So we just don't have time in the 1 hour slot to cover them all. But Terry, can I just say a huge word of appreciation again, yet again, you've always come up with the goods. You're so knowledgeable, so insightful. Thank you for sharing your thoughts today.
It's always a pleasure to be involved with you on these webinars. We always get a big audience, the biggest of all the webinars that we do, and the live audience today was really impressive numbers, and I think it's a credit to your reputation as someone who not only knows their stuff, but you keep winning awards, Rich. And I think you do.
We're at number 49, Terry. We're hoping to win one more this year to make it 50 at the half century.
I hope it's not one of the ones I'm competing for, but Propertybuyer wins awards for a reason, and that's because you're good at what you're doing, you know your stuff, and I do urge people to take advantage of that special offer that's available today.
Well, thank you everybody for watching today. As I said, we'll be sending out a copy of the recording and also the free report attached with that. And if you do have questions or would like to chat with us further and engage our services, please reach out. Really happy to chat with my team, and I want to wish you all the best for our Anzac long weekend, and stay safe, and we'll see you soon.
Okay, bye for now.
Thanks, Terry.